Hello children. Today we are going to discuss a new ratio, that is profitability ratio. First of all, let us see the classification of ratios. There are four categories of ratios. The first one is liquidity ratio. Second one, solvency ratio. Third one is activity ratio. And the fourth type is profitability ratio. We have already discussed the first three types of ratio. Today we are going to discuss profitability ratio. What is profitability ratio? We know that an efficiency in a business is measured by its profit. So profitability refers to financial performance of the business. So here are some ratios which will help us to assess the profit capacity or profit making capacity of the business. So they are: the first one is gross profit ratio, second one operating ratio, the third one is operating profit ratio, fourth is net profit ratio, and the fifth one is return on investment, which is also known as return on capital employed ratio. Today we will discuss the first type of profitability ratio, that is gross profit ratio. The formula to calculate gross profit ratio is gross profit divided by revenue from operation into 100. The answer of gross profit ratio is expressed in the form of percentage. To calculate gross profit, the formula used are revenue from operation minus cost of revenue from operation. Children, in previous class you know very well how to calculate cost of revenue from operation. You are from the last many days you are doing the problems related to calculation of cost of revenue from operation and revenue from operations. So you are very much familiar with these terms and the formulas to calculate cost of revenue from operations as well as revenue from operation. So the formula to calculate gross profit is from our revenue, that is our sales, if you remove your cost, you will get your gross profit. So as a revision, let me tell you that cost of revenue from operation, the formula to be used is opening inventory. You have to exclude spare parts and loose tools while calculating cost of revenue from operation for gross profit ratio. Okay, so while calculating gross profit ratio, you exclude spare parts and loose tools from opening inventory plus net purchase plus direct expenses minus closing inventories. So even in opening inventory and closing inventory, you have to exclude spare parts and loose tools. Okay, so this is the formula related to cost of revenue from operation. The previous what we studied in earlier, the same formula is here, but the only thing is you have to exclude spare parts and loose tools when you calculate cost of revenue from operation for gross profit ratio. Okay, the other formula is cost of revenue, it is cost of material consumed plus purchases of stock in trade plus changes in inventories of finished goods and work in progress and stock in trade plus direct expenses. So these are related to manufacturing companies. Cost of revenue from operation formula we have to use is in this way. Okay, and the other formulas for calculation of cost of revenue from operation is revenue from operation minus gross profit if you are asked to calculate cost of revenue from operation. So these are the formulas related to gross profit ratio. Now let us do one problem. From the following information, calculate gross profit ratio. You are given the revenue from operation, that is net sales, and gross profit. 2 years amount is given to you. So you have to calculate gross profit ratio for the two separate period. Okay, let us first of all write the formula. Gross profit ratio is equal to gross profit divided by revenue from operation, that is net sales, into 100. For 31st March 2019, as per the formula, gross profit of that year is given to you as 40,000 and revenue from operation given to you as 1,60,000. Because the expression of gross profit ratio is in percentage, you have to multiply it by 100. After dividing it and multiplying and dividing it, you will get 25% as your gross profit ratio for the year 31st March 2019. And for the year 31st March 2020, the same thing, but the amount with 2020 you have to use. Gross profit amount for that year is 60,000 divided by revenue from operation is 2 lakh into 100, and you will get the answer as 30%. Let us discuss operating ratio. The formula to calculate operating ratio is cost of revenue from operation plus operating expenses divided by revenue from operation into 100. There is one more formula, operating cost divided by revenue from operation into 100. So you can select any one of the formula according to the items given to you in the question. Here is a more detail about the ratio. The two formula we have already discussed. The expression of operating ratio is in percentage. So the answer for operating ratio is expressed in the format of percentage. If you look into the formula, to calculate cost of revenue from operation, there is three formulas given to you. The first one is opening inventory plus net purchases plus direct expenses minus closing inventory. If you look into the question, you can see you have to exclude spare parts and loose tools while calculating opening inventory and closing inventory. The other formulas are revenue from operation minus gross profit. There is one more formula, cost of material consumed plus net purchases of stock in trade plus changes in inventories of finished goods, work in progress and stock in trade plus direct expenses. So there are three formulas given to you. So decision about the formula will be on the basis of the items given in the question. Cost of revenue from operation we have already discussed in our previous classes when we were calculating other, that is inventory turnover ratio and gross profit ratio. We have already learned these formulas. The only difference is you have to exclude the spare parts and loose tools while calculating opening inventory and closing inventories. The next part of this formula is operating expenses. There are two formulas to calculate the operating expenses. They are employees benefit expenses plus depreciation and amortization expenses plus other expenses. So this is one formula, or you can use the formula office expenses plus administrative expenses plus selling and distribution expenses plus employee benefit expenses plus depreciation and amortization expenses. Here also, according to the item given to you in the question, you have to make a choice. So, and the bottom item is revenue from operation, that is the sales value. So this is the first formula. Now regarding the second formula, the operating cost can be calculated by using the two formulas. The first formula, you can see cost of revenue from operation plus operating expenses. Or you can use cost of material consumed plus purchases of stock in trade plus changes in inventories of finished goods, work in progress and stock in trade plus employee benefit expenses plus depreciation and amortization expenses plus other expenses. In short, operating cost is cost of revenue from operation. You know what are the how to calculate cost of revenue from operation. Plus you also know what are the formulas for operating expenses. So adding the items of cost of revenue from operation with the operating expenses, adding that together, you can calculate operating cost. Okay, so these are the explanation of two formulas. Now let us move to a problem. From the following information, calculate operating ratio. You are provided cost of revenue from operation, that is 6 lakh, revenue from operation 8 lakh, operating expenses 40,000. The first part of your solution is writing the formula. Operating ratio is equal to cost of revenue from operation plus operating expenses divided by revenue from operation into 100. All the three items is given in the question. Just substitute the amount. Don't forget to write into 100. So you will get the answer as 80%. So your operating ratio is 80%. Operating profit ratio and net profit ratio. Operating profit ratio shows the relationship between operating profit and revenue from operation. As the expression is in percentage, you have to multiply the formula with 100. So operating profit ratio, the formula is operating profit divided by revenue from operation, that is net sales, into 100. As per the formula, you have to calculate operating profit. So here are some formulas to get the operating profit. The first formula you can use is gross profit plus other operating income minus other operating expenses. Or you can use the formula net profit before tax plus non-operating expenses minus non-operating incomes. Or you can use the formula revenue from operation minus operating cost. These are the three formulas which will help you to get the amount of operating profit. Now for revenue from operation, you can use the formula cost of revenue from operation plus gross profit. Here is one problem related to operating profit ratio. Calculate operating profit ratio in the following cases. So the first case is revenue from operation, that is net sale, is given to you as 5 lakh and operating profit is given to you 75,000. So let us do the case 1 first. The first part of your solution is writing the formula. So operating profit ratio is equal to operating profit divided by revenue from operations into 100. Your operating profit in case 1 is given to you as 75,000. So you can write 75,000 here. And in first case, the revenue from operation is 5 lakh. So 5 lakh into 100. That will give you 15%. That is case 1. Now case 2. Case 2, revenue from operation, that is net sale, is given as 6 lakh and operating cost is given as 5 lakh 20,000. So we have already written the formula operating profit ratio is equal to operating profit divided by revenue from operation into 100. Here we have to calculate operating profit. In case 2, they have not given you operating profit, but you can use the formula operating profit is equal to revenue from operation minus operating cost. Doing this, you will get operating profit. That is, sales minus cost will give you profit. Okay. So what is the sales amount? 6 lakh minus what is the cost, operating cost given to you? 5 lakh 20,000. When you subtract this, you will get operating profit 80,000. Now write this 80,000 in the formula as per the formula for operating profit ratio. Operating profit in case 2 is 80,000 and case 2 revenue from operation is given as 6 lakh. So write down 6 lakh over here into 100. That will give you the result as 13.33%. Now case 3. Case 3, revenue from operation, that is net sale, is given as 7 lakh 20,000. Gross profit ratio is given to you as 20%. Operating expenses is given as 36,000. So this formula is the same. Operating profit ratio is equal to operating profit divided by revenue from operation into 100. Revenue from operation is given to you in case 3 as 7 lakh 20,000. Now what you have to find? Operating profit. So with the given information, you have to do that. So here the formula which help you to get the amount of operating profit is operating profit is equal to gross profit minus operating expenses. Children, you have to be very familiar with the 3 formula for calculating operating profit which we saw in the earlier slide. So these formula will help you to get the answer. So operating profit is equal to gross profit minus operating expenses. So from your profit, if you subtract your operating expenses, you will get operating profit. So gross profit is equal to, what is the information given to you? Gross profit ratio is 20%. So on what percent this 20% you will calculate to get gross profit? On your sales. So your sales is 7 lakh 20,000. On that, if you calculate 20%, you will get the gross profit amount. Okay. And minus operating expenses, it is given to you in the question, is 36,000. So 36,000, the answer of, that is the amount of operating profit what you got is 1,08,000. Substitute this amount in the formula. Operating profit you got through the working note, 1,08,000 divided by sales in case 3 is 7,20,000 into 100. The answer what you will get is 15%. Net profit ratio. The formula to calculate net profit ratio is net profit divided by revenue from operation into 100. If you look here, the expression of net profit ratio is in percentage, and the formula to calculate net profit is revenue from operations minus cost of revenue from operation minus operating expenses minus non-operating expenses plus non-operating income minus tax. Okay, now let us do one more problem. From the following information, calculate net profit ratio. The items given to you are revenue from operation is 5 lakh, gross profit is 2 lakh, salaries and wages is given to you as 45,000, advertisement expenses is 10,000, interest 5,000, and rent is 60,000. So write down the formula first. Net profit ratio is equal to net profit divided by revenue from operation into 100. Then, as you are supposed to find the net profit, revenue from operation is given to you in the question itself. Now you are supposed to find the net profit. So let us use the formula gross profit minus indirect expenses and losses plus other income. Here gross profit amount is already given to you as 2 lakh. Indirect expenses, which are the list of indirect expenses given to you in the question? It's salary and wages and advertisement expenses and interest. So these three items are your indirect expenses. So those three items you can add together and you will get amount of 60,000. Okay. Now other income. So that is your other income. Yeah. Rent is your other income, that also you have to add over here, and after substituting all this amount, that is gross profit which is given in the question, indirect expenses loss you have calculated in this working note, and other income, that is rental income, is 60,000, that is given to you in the question, and adding that together you will get the amount of net profit. That amount you can substitute in the formula. Revenue from operation is given in the question, write down that, and into 100 you will get the net profit as 40%. Return on investment, that is ROI, or we can also call it as return on capital employed ratio. The formula to calculate return on investment ratio is net profit before interest, tax and dividend divided by capital employed into 100. The expression in which ROI, that is return on investment, is shown is in percentage. If we go in depth with the formula of return on investment, we have already studied how to calculate net profit before interest, tax and dividend. Do you remember, children, in which formula we have studied this? Interest coverage ratio. So we know how to calculate now in net profit before interest, tax and dividend. We also know how to calculate capital employed. Do you remember in which formula we have studied this? Proprietary ratio. So almost the formula is the same. Let us have the review on capital employed ratio calculation. We have two approaches under capital employed, that is liability side approach and asset side approach. In liability side approach, the items which we have to consider is shareholders fund. Under shareholders fund, which all are the items? Share capital, reserves and surplus. And in case surplus or balance in statement of profit and loss have debit balance, it is deducted to calculate shareholders fund. Debit balance means it's a loss. And the second item which we have to add here is non-current liability. So two items will come under non-current liabilities, that is long-term borrowing and long-term provisions. So these two items are added together under liability side approach. And if you are going with asset side approach, you have to take into consideration these items, that is non-current assets. And which item are considered in non-current assets? Three items: fixed asset, tangible fixed asset, and both that is intangible fixed assets. So the both are considered. Then non-current trade investment. Non-current trade investment is also considered. It is assumed that all non-current investment are trade investment unless specified to be non-current investments. So all the items of trade investment we have to take as non-current investment. Okay. Then long-term loans and advances. Those loans and advances which we have given to the outsiders, that is our asset. Okay. So that will be repaid to us. So long-term loans and advances. So these items comes under non-current asset. And second item is working capital. Which are the working capital? Current asset minus current liability. So under asset approach, you have to consider these items. So you can go with any of the one approach. Now let us do one problem. Here you are asked to calculate return on investment. The information given to you are net profit after interest and tax at 6 lakhs, 10% debenture rupees 10 lakh, tax is given as 40%, capital employed amount is given to you 80 lakhs. As usual, write down the formula first. Return on investment is equal to net profit before interest, tax and dividend divided by capital employed into 100. Here, the working capital to calculate the net profit before tax, interest and dividend, you have to show the working note. You can see here net profit after interest and tax is given. But as per your solution, you want net profit before interest, tax and dividend. So go for a working note. Now let us assume that net profit before tax is 100 and you have given that tax is 40%. Check out over here. Look, we can go for a detailed working note. Net profit before tax is 100. We have assumed that as 100. Tax is 40. So before tax, your profit was 100. After paying 40 rupees tax, what is your net profit now? After tax, it's 60. Okay. So if net profit before tax as per our assumption is 100 and you got net profit after tax as 60. So if 6 lakh, from where this 6 lakh came? It is given in the question that net profit after interest and tax is 6 lakh. So if net profit after tax is 6 lakh, what will be your net profit before tax? So go for a cross multiplication. So you are in proportionate way, how much is your net profit before tax you can find out, and that comes to 10 lakh. So your net profit before tax is 10 lakh. But children, net profit before tax is 10 lakh. What about the amount of interest? Here you can see that debenture, which is a long-term borrowing, from that 10% is the interest rate on debenture. So on 10 lakh, if you calculate 10%, you will get 1 lakh. So adding the net profit before tax plus interest together, you will get amount of 11 lakh. This 11 lakh you will substitute over here, and capital employed is already given to you as 80 lakh into 100. You will get the answer as 13.75% return on investment.